Guys, welcome back to the channel. In today's video, we're actually going to we're going to take it right back to basics and just really talk about some of the reasons why you should start investing. And the reason why I thought I'd make this video is because, I'm noticing a lot more and more that obviously in this day and age, the information age, there's so much information out there which grants a lot of people access to things like investing and knowledge on finance and gaining financial literacy. But also with that freedom of information comes a lot of misinformation as well about investing and things like that. So, like for example, a lot of people think that getting into investing is about getting rich quick. Putting your money into a crypto that you heard from somewhere that's going to go up and straight to the moon, or putting your money into an NFT that's going to go crazy, or a project that's got all a good community around it and all these things. And I think it's really important to just, kind of go back to the basics and understand and just go over why you should be investing and what investing really is about. Investing is about using the power of compounding, which Warren Buffett calls the eighth wonder of the world, and just using that to build your wealth over long term. Investing is not about speculating into these altcoins or speculating into these NFT projects and hoping you turn a quick profit within the next month or two. That's you might as well go and gamble, basically, right? I mean, for example, on Instagram, right, I follow a lot of fitness Instagram. Well, I used to anyways, because I was really into fitness, obviously, right? So the same fitness gurus that I would trust with information around, how to build bigger pecs, or how to squat, or how to, bicep curl. A lot more and more of them lately, I go on their stories and all they seem to be talking about now is pushing these NFT projects, right? They're pushing these NFT projects and, saying, they've made this much in this amount of time, and all in the same breath saying, hey guys, this is not financial advice, do your own research. Well, to me, that's kind of talking out of both sides of your mouth, right? You can't you obviously are an influencer. You have influence over thousands and thousands of people, most of these guys. And then they go out and put out a post, saying, hey, look, guys, I've made X amount of money, but this is not financial advice. And what that does is, there's going to be that young person who's really wanting to, invest or make some money, and they're going to think, wow, it's really that easy to make $10,000-$20,000 in the space of a couple of weeks. But that's just not realistic. More times than not, more often than not, you're going to lose money, you're going to get burnt, and you're gonna think that investing is evil and is only for the rich, and that's how this whole sort of misconception around how investing is only for the guy in the suit and the rich and the smart and the powerful, which is just not true. So today I just wanted to go over some key, like really, really basic things about and why you should invest, and just keeping it simple, and why putting your money to work for you and letting your wealth compound over the long term could be a really, really good way for you to build wealth and retire the way you want to retire. So without further ado, let's get straight into today's video. So for today's video, I just wanted to take you over, some of the misconceptions about money that you must have heard, you might have, learned while growing up, and just take you through some of those things and why you should actually invest your money instead. So for the rest of the video, we're just going to go ahead over to the laptop, and I'll just run you through some really, really basic numbers and, just show you why you should be putting your money to work. All right, guys, so we're actually at the laptop now. And the first thing that you were probably told when you were younger when it comes to saving and investing, well, more like saving, is that you need to, go find a good job, and then when you get paid, you put your money in your savings account and you sort of leave it there, and you save and save and save, so that when you retire or when you finish working, you have a boatload of money waiting for you. This is, in practice, it's good to be a saver. It is always good to save money, don't get me wrong. However, the idea of leaving your money in a bank account that whole time while you're working away and working towards retirement is one of the worst things that you can do with your money. And here's why. So let's just have a look at what the current interest rates are for savings accounts, right? So I've just got a screen here where I've quickly just Googled, in New Zealand, this is in New Zealand, what are the interest rates that you're getting for an account? And for this, I've put as a filter savings account with with a minimum of $1,000 deposit into it, right? So let's just go through this. Look, so you got here Notice Saver, Robobank 1%, savings here 0.6%. Keep going down, 0.25% at Kiwi Bank, 0.25%, Fast Forward Saver, First Saver. You quickly will see that the interest rates are extremely low. ANZ, serious saver, right? You're a serious saver, but you're only getting 0.2% on your money, right? So just by putting your money in a bank account, and that whole time that you're, because obviously, say you're in your mid-20s, you're going to be working for at least 40 years, right? If you're the average Joe, I'm basing all of these numbers on the average person out there who's trying to figure out how they can actually build enough money so that when you retire, you're not going to have to come back and work when you're 70, right? So that's what I'm kind of basing these on, right? So ANZ serious saver, 0.2%, and that's if you're a serious saver, right? I hate to see what it'd be like if you're not so serious. ANZ online account, 0.05. I mean, your money is literally sitting in the bank account doing next to nothing, right? Just wasting away. And I'll get into more what I mean by wasting away later in the video. But let's look at some numbers now, right? Now I've got here a savings calculator, right? I've already kind of filled in the numbers. So let's just say, so to explain starting balance, right? I've said, you're someone that's got $10,000 on the side. You put $10,000 in the bank account. Every month you put in around $400 to $420, which equates to about $5,000 a year. Now, the reason why I said $5,000 a year, I based this off the assumption of someone who's making $50,000 per annum, and that's someone that's saving 10%, because obviously that's the recommended amount. If you're a good saver, you're saving at least 10% of your earnings, right? So if you're earning $50,000 and you're putting aside 10%, you should be putting aside $5,000 a year. All right, so which equates to $420 a month. And then I've got here over a period of 40 years. Again, I'm basing this off someone who's in their mid to late 20s, who's going to be working until their mid to 60s, right? And 40 years and and I've got here the annual interest rate of 1%. All right, so this is what you're going to save up in that whole time of 40 years. You end up with $262,876.64. Let's have a look at this interest earned. Right, so this is what your money earned during that whole time, 40 years of saving and putting money away. In that 40 years, you would have earned $51,276 of interest, right? You've contributed, so this is all the money that you've worked hard and put away, $201,600. That, to some, you look at this number and it doesn't, you're like, what's wrong with that? That's great. 261,000, 262,000, that's great. I'd love 262,000 right now. I could retire right now, but that's not true. The thing is, 262,000, if you go ahead and do the math yourself, say you want to live off $262,000, right? You're gonna withdraw, like you want to live off 262,000 with a salary. Say you withdraw $300 a week, right, to live off. I know you're gonna need more than $300, but let's just say $300 a week, right? If you go ahead and do the math, that would maybe last you 16, 17 years, right? And keep in mind, guys, just because you're 65, you can live for another 25, 30 years. You have a whole nother lifetime waiting for you. So, and $300 realistically, you're not going to be able to survive off $300 a week, right? So already you can see that this 262,000, and that's 40 years of you working your ass off, to get this money, right? The problem is, and this kind of leads to the second kind of point that I wanted to make in this video, right? And why you really need to invest your money. And the biggest enemy to your wealth building, the problem is inflation, right? And earlier I mentioned that if your money's sitting in the bank account, it's losing value, which means this 262,000 that you see here, in 40 years time, it is not going to be worth 262,000. If anything, it'll be worth a quarter of that. And I'll show you in a second, right? So for those of you who don't know, inflation is basically just a general rise of the cost, the cost of living, right? The cost of goods, like the things like bread, petrol, your everyday products, the general rise in the cost of those things, right? It's measured through the consumer price index. And as of right now, New Zealand's inflation is around 3%, right? Increase, which is the highest it's been in quite some time. You can Google it up yourself. Now, 3% doesn't sound like a whole lot, right? I mean, 3% that sounds quite easy, really, but you'll see in a second that it really does eat away at your money, at your buying power specifically, right? So now let's jump into an inflation calculator. Again, guys, this is all stuff that you can just jump on Google and look up yourself and do these calculators yourself and work it out yourself. So I've got here, right? So category, general CPI, again, consumer price index. I've got $1, right? And the date of the cost. So this is $1 in 1981. This was 40 years ago from today to 2021, right? So 40 years ago, obviously, it was 1981. So $1 then, right? The amount of stuff that you would be able to buy with $1 back in 1981, you can see you now need $4.62 in today to be able to buy the same amount of stuff you were able to buy with $1, right? Now, if that doesn't make sense, you ever have your your parents or your grandparents, and they tell you, oh, back in my day, I used to take 5 cents and go down to the local dealership and buy a brand new Ford, and now it's like $40,000. You know what I mean? Like, you get that story all the time. You hear about that all the time. Maybe it's not, okay, I over-exaggerated a bit there, but you hear about the story where they would be like, a loaf of bread, I used to be able to buy bread for 20 cents. Now it's like $4. And the reason for that is it's inflation, right? The cost of those goods, rising over time, right? And not only that, the more important thing is not to think of the cost of the goods rising over time. It's the amount of buying power that you're losing, right? So basically, that $1 40 years ago, to buy the same amount of things that you were able to buy with that $1 40 years ago, today you would need roughly around $4.62, right? Now, here's where it really blows your mind, right? Now, not that one. Let's go back to our savings, right? 262,000, right? Let's put 263,000 here. Remember, guys, that savings calculator is based on someone who's saving today in their mid-20s, hoping to retire 40 years from today, right? So let's see what your 40, what you're going to need, what that 262,000, how much you're going to need in future dollars to have the equivalent of that 262,000, right? So let's put in $263,000. Let's round it up because I'm terrible with numbers, right? Here we go. Boom. Oops. See, I'm bad with numbers. That's one too many zeros. There we go. So look at that. So this savings calculator that I put here, it may have sounded nice, all well and dandy, that you're going to have $262,000 waiting for you in retirement. If you say 50,000, if you earn 50,000, putting away 10% for the rest, for the next 40 years. But this does not account for inflation. This is not, this does not account for, you're not going to have if you have $262,000 today, you're not going to be able to buy the same amount of stuff with this money as you will be in the future. I hope that, I hope you guys are catching on what I'm trying to put down here. So that same $263,000, 40 years from now, when you do retire, because you're only 25, 26, or 28 right now, but 40 years from now, you're going to need $1.2 million, right? And that's, with inflation, that's adjusted for inflation. So yes, you might, and I'm telling you guys, you're not gonna, the amount of money that you might be saying, oh, well, I might get a raise from my job, you're not gonna be able to keep up with inflation, right? The buying power, the amount of buying power that you lose, right? Look, decline in purchasing power, 78.3%, right? And this is me basing this off, and this is just based off the general CPI at the moment, right? Right now, it looks like it's going up, right? Which is crazy. But, decline in purchasing power of 78, which means the money that the dollar that we have today is going to be worth $1 in the future, right? $1 today is going to be worth it's going to be worth 25 cents in the future, which means you're going to need a lot more money, $1.2 million specifically, to be able to buy the same amount of stuff that you can buy with $200,000 today. So if you're sitting there right now thinking that you can just save your way into retirement, you really need to get onto, need to like get a plan in place, because you're in for a rude awakening if that's your plan today, right? So again, guys, I really wanted to show the power of inflation, right? How just inflation alone can just take away from just eat away at your savings account. All hope is not lost, right? Because the whole point of this video is about why you need to invest. And this is exactly why you need to invest. Investing for the long term, allowing compound interest to do its job to work for you, allow your money to work for you, is not only going to keep pace with inflation, but it's actually going to get you ahead of inflation, right? Now, here's a compound interest calculator, a really simple one on Money Hub. So what I've done, right, that same $10,000, right, that you started off with in your savings account, I've got here that let's say you invest that in an index fund, like let's just say the S&P 500, who over the last 100 years has brought back a average return of 10%, right? But let's be a little bit conservative and we'll put 8% annual interest rate. Over that same 40 years, calculate that. That $10,000, as you can see here, you'll end up with $217,000, 245 cents. Now, the total, what I want you to look at here is the total interest that you've earned. In that same period of time, right, from your 1% in your super serious savings account, where you earn 51,000 interest, right, compared to your total contribution of $201,600. In that same period of time, your total interest earned is $207,000, right? Now, guys, this is actually just $10,000 without you making any contributions. This is just if you take $10,000, leave it in an index and let it compound for you over the next 40 years. That's just if you just set it, forget it, go about your day, go about your life, come back 40 years from now. That's what happens if it compounds at that 8%, right? It could do, the thing is, 8% is, somewhat conservative, right? Because like I said, historically it's done 10%, right? Now, let's look at a calculator. What if we add, right? Let's just say, what if we add, like, regularly contribute, right? So let's say, again, current principal, $10,000. And then again, we'll annual addition, 5,000. Right, because again, 10% of 50,000, years to grow, 40 years to grow. Interest rate, 8%, compounding, right? Compound that once annually. We'll make that additions at the start of every compounding period. We calculate that, and the future value is now $1.6 million. All right, now I know this sounds just crazy and so far-fetched, but that's the numbers. That is really what investing is all about, right? It's as simple as that. You don't need to go out and risk your hard-earned money, on all of these speculative things that are out there in the market right now, right? See, this is the simplest strategy about just being a passive investor, and you show up every year and you contribute the same amount no matter what the market is doing, and you just buy that index or you buy those funds that you're in, and just be consistent and hold it and have a long time period and have that long time horizon in mind, right? So if you look here, this is the numbers, right? This is exact. I mean, I'm not gonna say here I guarantee you're gonna make 8% in the next 40 years, right? But all we can do is look back historically and see what the market has done in those time periods, right? Now, what if this could do, it could do a little bit worse, or it could do better, right? What if it did hit that 10%, right? 10% calculates that, that's starting with $10,000 today. You retire, you have $2.8 million in your bank account for you to retire on, right? So, and that's not even taking into account your Kiwi saver, all the other things that you have on the side. By then you might have a house. So just by doing the very, very, very simple things, and allowing compound interest to work for you, you could have, a very, very comfortable retirement waiting for you, right? Otherwise, what is your other, what's the other plan that you might have in mind right now, right? Again, I've just showed you that leaving your money in a savings account and working your whole life to have, to save your money and leaving it in a bank account. I've just showed you why that's a terrible idea, right? Why having, just having your money earning next to nothing, basically, right? That 1% that your savings account is going to earn, inflation is going to eat away at it, because inflation is in going up by 3% every year. Okay, so again, I wanted to show you guys really the power of compound interest, right? It's just allowing your money to grow and grow and grow and this is without you having to research, companies, or do a whole bunch of work. This could be you just coming up, showing up 6 months, a year, every year, and just all you have to do is click a button, buy that index fund, buy those mutual funds, whatever it is that you're investing into. Specifically, I would say buy a broad market diversified fund if you're going to do that strategy, and just letting your money grow for you. Okay, so those are the things I really wanted to show you today. Why saving is for losers, and I don't mean losers in the sense of being a loser, but you're losing money if you're saving money, right? And why inflation is going to kill your buying power. Most people don't even realize that, but inflation is going to kill your buying power. And the last thing you want to do is be 75 and have forced to go back to find a job because you've run out of money in retirement, right? And lastly, I just wanted to show you, some simple numbers. You can jump on Google and do these numbers yourself, right? If you don't like what I put in here, go ahead and do it yourself. You can literally just Google up compound interest calculator, retirement planner, inflation calculator. These things are all there for you. You've just got to realize that, this is actually what's going on. And once you do, you're going to do something about it, and you're going to be fine, right? Just follow the basics. Don't fall into these traps of promising you to get rich quick, because it's a quick way to go broke. I promise that. Now, guys, if you got any value out of the video, if you really enjoyed it, please like the video, subscribe to the channel. It means a lot to me. Comment down below if you have any questions, or if there's anything you want me to talk about. But I do appreciate you watching. If you enjoyed this type of video, there's a whole bunch more on the channel. Just head on over to Money with Marcus, and hopefully you take away something from there. But until the next one, I can't wait to see you guys.